let's say personal development. Being able to not allow anyone else to impact your decisions, being able to know exactly what's true. I talk to traders and I'm like, okay, it's the beginning of the week. It's a fresh start. The market hasn't formed structure. What do you think is going to happen? And they start giving me this they go into this detailed thing about what they think is going to happen and all this stuff. And I'm like, wrong answer. You ever talk to a trader and you ask them what's going to happen and they tell you with certainty what's going to happen? Run. All right. I will tell you guys with certainty what I'm going to do. I'll tell you, like, hand on a Bible, when the market gets there, I'm going to take a trade. Okay. But what I'm not saying is the market will get there. What I'm not saying is the market has to get to that zone, to my entry. What I'm not saying is the market has to reject when it gets there, and it will go to these prices. Everything I do and every decision I make as a trader goes down to probability. Okay, you're walking on a bridge, you're on the ledge. If you take one step off the ledge, what's the probability that you fall off? That's pretty fucking high. Now, what if you magically, pull a Spider-Man and catch yourself on the way down? Well, let me close up my windows here. We got birds chirping, we got Miami traffic going. Back. Yeah, not gonna lie, I lost my train of thought. But I'm pretty sure it was heat. Almost positive it was heat. So US 30 starting to turn back up. My final target on US 30 is 35,500. Let's look at some microstructure. If someone remembers what that train of thought was right before I went to close the window, let me know. I'm not going to finish up. I'll probably finish it up, just kind of put an ending to it, but let me remove these real quick. Remove this real quick. Let's look at this on the smaller time frames, smaller being the 1 hour here. Support. Just broke the previous high. Come on, give me something, baby. Oh, this is it. Yeah. So I think the market's going to continue going long here. Okay, let me show you guys something about entry. A lot of people, what they'll do is they want to take this entry, they'll just go like this. All right, put it in the chat. How many of you guys have done this before? Where you're like, well, the risk and reward on this trade is not good, 1.27. If I want a better risk and reward, let me just move my stop loss up. Oh, 2-to-1 trade. Nice. Who's ever done that? If you guys are watching this on YouTube live stream, please make sure to like and subscribe. Okay, so there's two ways to improve your risk and reward. Your stop loss is set below this structural level, and ideally it should be below this level here. So it should really, really be like this. Okay, this is a 1-to-1 trade. Now it's pretty high probability. We have a break above the previous high, nice closure above, a retest back inside, rejection off the 70, 786, and now we're closing above the 88.6. This is a pretty solid trade, high probability. Now, if we had entered at the bottom of the wick, take a look. We're at 1-to-1 R&R. If we enter at the bottom of the wick at the 70% fib, now we're at 1.5-to-1. You guys see how that works? That's a huge fucking difference. You're risking $1,000. You want to make back 1,000, or you want to make back 1,500? That extra 500 it'll come in clutch for you. And so the reason I always like to enter at the bottom of the ranges, which sometimes doesn't happen because you have a break above and you have to wait for that. But if you enter at the bottom of the range, Now you're at 3.3 to 1. So these trades don't happen as often, right? Where it comes all the way back to the bottom of the range. Sometimes it just does shallow retest and push. But what if it does come back? What if you're like, I'm only going to take the trades that hit the bottom of my range, because that's how I can get that 3.4 to 1. All right, different ways to trade. When you chase the markets, it does impact your risk and reward ratios. And so just be mindful about that if you guys are going to be taking any of these trades. Now, the beauty about trading in the direction of the market is that you can actually leave a running position. So you don't have to close everything at TP1. If you leave a running position all the way to the final TP, that's a 4 to 1. If you closed half the trade at TP1, then you would get a 2 to 1. So still good. That's why runners are important. Sometimes they'll pay off way more than the original partials you took from the trade. It says guilty of doing that in the past. Brother, we all are. Anybody who says that they've never done that is lying through their teeth. If someone can go back to the group chat this morning, I said I was going to either buy or sell NASDAQ. Do you guys remember what direction I said? Let me know in the Zoom call. What direction did I say I was going to take NAS this morning when I put up the message in the group chat? If anybody was paying attention. It's the same direction I've been trading for goddamn 3 months now. I got my super secret indicator right here. I'm gonna release these custom settings during the NASDAQ bootcamp, just to show you guys. New York obviously is the only session you want to trade. Pre-New York, so let's say Tokyo, Frankfurt, London, and then pre-New York, completely different segments. You'll have consolidation in Sydney, consolidation in Tokyo. Frankfurt session pushes up, London goes all the way down, sideways in the pre-session, and then up at the market open, down for the rest of the market session. Like the direction that you think that you're going to catch and just hold it all until fairy tale land, you're out of your fucking mind. You have to find a day trading strategy if you want to day trade this. If you want to swing trade it, delete all that, head up to the 4 hour and just look at structure, just like we're doing right now. I'm swing trading this, but I'm also talented enough and skilled enough at trading NASDAQ to find intraday entries inside of my swing trades. So that's how I can find these sort of like precision type entries. Oh, it's too much. There's too much shit going on. Okay, so this was the retest right here. That was the first entry. And then this was the entry from this morning. Now, keep in mind, I also had entries sitting right here at 250. Market pushed up. I was taking partials. We had a re-entry here. We re-entered this trade yesterday. Then the market came and grabbed my break even. I entered at the close of that wick after the CPI news. And then the market came and grabbed my break even and pushed up. And so again, market consolidated today. I waited for the liquidity grab. It was almost at the 88.6, not quite there, but I had to make a judgment call. Do I want to miss the trade or, 4 or 5 extra pips of risk? I took the 4 or 5 extra points of risk instead. And so I took that entry at 350. Okay, I'm floating about 1,800 on that trade. And I already secured partials. I had 30 lots on there. Beautiful. All right, so now we're reaching the previous highs. Whenever you're in a position that's directional and you get to the previous highs, this is where you want to be looking to take partial profits. Now, based on the momentum, it kind of looks like we're going to break right through that entire zone and then come back and retest. So what I will do is actually close half the position as we reach that previous high and then leave the rest running with an open take profit. Okay, that's that 786 zone. Looking good, looking good, looking good. So we're very likely to see a pullback or some kind of turnaround from this price right here. So very, very important zone. Let me actually mark it off right there. Delete the fibs, clean everything up. Okay, beautiful. So two things are going to happen here. We either retest the lows of today's session and then continue, or close below the body of these candles, the body of this floor. If we close below that 15,370 zone, this thing is going to push all the way down to 300. So I am expecting a bit of a pullback here. Again, pullbacks come in two main styles, two main shades. One is the shallow pullback when the market is in high momentum, very strong, a lot of volume. You'll typically see shorter pullbacks because it's not going to give you a full opportunity to get in and take your time and you know, explore. It's in and out. So quick retest and continuation. Then there is a deep retracement, which typically happens in more stable trends. When you see a higher time frame trend, it's intact, it's moving, there's no emergencies, there's no war all the time, it's just a trending market. You'll typically see deeper pullbacks because that's the nature of how money moves around in the Forex markets. You know, there's, for every buy orders that are going in, there needs to be equivalent sell orders. Markets typically retrace because those people are closing their original trades, or other people are entering the market on the opposite side of that trade to take over their positions. You will see pullbacks very regularly. When the market is just aggressive, it'll be a 20% retest, boom, 20% retest, boom. And you're waiting for a 50 or 60% pullback. That'll never come. Roy, how'd you download mobile? Oh, Jazz, what's going on? How'd you download mobile MetaTrader on your Mac? Well, actually, I don't even know if it's on there. Before it got deleted on the App Store, on the Mac App Store, not the Apple App Store, the Mac App Store, it was one of the options on there. I deleted, or I downloaded MT4 and MT5. Best decision I've ever made, hands down. I love using the web terminal version. Everyone's like, oh, there's this new company that's coming out and they're doing this, they're doing that. I'm like, dude, why don't you just download MetaTrader on your Mac, and none of these issues exist. And it's really cool because I can just drag things around. Look at this. If I want to move my stop loss, I can just drag it up and down. Right now, there might be a setting to show me how many dollars I'm risking if I go up and down. That's a feature I'd really like to see, but not as important to me. Like, I know what I'm risking. You know, it's yeah. We put out an article this morning. If you guys are not subscribed to the email list, make sure that you are, so you guys can get updated on a lot of the tips and tricks that we're sending out via email. We're putting together like little articles. We're going to start to put them out in the mornings and be like, hey, here's some tips before you start trading. Today's article was top 10 mindset tips for mental health in trading. Very crucial. And if you guys are not prioritizing mental health, trust me, it's going to come back to bite you in the ass unless you get proactive. Be proactive in your mental health. Be proactive in your mindset and personal development so that you don't have to wait for the market to force you to change in order for you to change. You can do it voluntarily. If you don't do it voluntarily, I promise you the market will force you to grow or to leave. And so just take that as a priority, read those mindset tips and just go through them one by one. How well have I taken care of these things in my personal life? And how could this potentially affect me in my trading and my decision making? He says, can you send it to me? I don't think I can. You would have to just download that directly from the App Store. If you're watching this on YouTube, please hit the like button real quick. It takes 2 seconds, literally 2 seconds, literally 2 seconds. So if you guys wouldn't mind, yeah, drop a like real quick just so it can send the video out to as many people as possible. Let's talk about the news this morning. So we went through this. We're talking about core retail sales. People are still spending money. That's good. PPI, this is the big news for this morning. It's the Producers Price Index. So yesterday we had CPI, the Consumer Price Index, the cost of a basket of goods and services that consumers, people like us, spend money on. Groceries, toothpaste, diapers, all the shit. I don't have kids. I'm not spending on diapers, but you guys get the drill. Baby formula. And then there's retail sales and core retail sales. Core, whenever you guys see core, it just means that it's missing something. And the reason that they do a core versus a headline number is because whatever that thing that they're removing is typically skewing the data. So for core retail sales, it excludes automobile sales, because automobile sales, they're very seasonal. They depend on like a generational thing. Once an entire generation of 16-year-olds, has a permit, in a few years, people are getting cars and there's all this, so it has a very predictable pattern, but it goes in waves. When you exclude it from the data, you get a much more smooth reading, which is why you guys will see the difference between core and headline. And so core retail sales are up, which means people are spending money on stuff, not cars. And then retail sales in general are up significantly, which means it kind of looks like car sales are pushing a lot of these sales here. The producer price index came out way higher than expected, and this is going to bite us in the ass. So someone tell me, why is the producer price index important? I've said it about 25 million times this week for CA members. What is the significance of the PPI as an indicator? The chat. If suppliers pay more to make, we pay more to buy it. There we go. Thank you, Mo. And I'm not surprised that you're the one that had the answer. What Mo was saying is that when we have, let's see if I drew this zone slightly off. I think it should be right here. It should be right here. I'm looking for a re-entry opportunity, y'all. So very simple, top, bottom, 786, re-entry. Oh, that's fucking ugly. All right, we'll keep an eye on this one. But what Mo is saying is that when producers, the people who make all our stuff, the iPhone, the shoes, the everything that we have, if they're paying more, we're going to end up paying more. Look at the price of the new iPhone. So everyone's talking about deglobalizing, becoming less dependent on China. Okay, cool. So then you're going to go around the world and find parts somewhere else and then get manufacturing somewhere else. Got it. What's the result? The iPhone's going to be like $3,000 in the next 5 years. Right? The price of everything will go up if we're going to deglobalize. And so part of the producer price index problem is the supply chains around the world. We got Russia, China, India, South Africa, and Brazil. Large, huge economies there. Brazil is exporting coffee, sugar, some really important, pretty important resources. You have a lot of these African countries, especially South Africa, which is running a lot of the mineral trade that's interacting with the rest of the world. You have China, one of the largest populations in the world, in India. So they're starting to trade with each other. Supply chains are getting screwed because of geopolitics. And that just basically means it's harder to get stuff. If I want to make shirts and I'm ordering them from China on Alibaba, they used to show up in 3 weeks. Now they're showing up in 7 or 10. Right? You used to order some antique, whatever color fabric from India, for example. Supply chains through Europe are getting screwed. So now you have to wait longer. So the more that we pay, the more that producers pay, the more that we will end up paying in the end. Great job, Mo. So it's an early indicator for inflation, long story short, for consumer inflation. So now you guys are asking me a question. Roy, if inflation's still going up, isn't that bad? How many people want to take that position? If inflation is going up, that's not good. And if it's not good, then the market should be reacting differently, because that's technically bad news, right? How many people take that position? Put a 1 if you guys take that position. And I'll explain why the market's doing the exact opposite. Ooh, what a rejection. All right, that's what I got for gold. Now it's moving so aggressively, it could break above this whole area and just start playing around here, in which case it'll be like a break, push back in and continue. But if we do reject that the 1912, there's going to be like a scalp opportunity here. From 1912 to about 1908, it's only 40 points, or yeah, it's only 40 points. So I don't know if I would bother with that, but with how aggressive the market is, might be worth a shot taking a continuation for a short. We're very low in the range. Like personally, you guys all know how I feel about this. If this is support, everything below is a buy, right? If this is our resistance right here, or sorry, this is our resistance right here. This is like the most recent structural high. Everything above this is a short. So what a lot of people do is when the market breaks above a certain level, they start looking at it as a long. What I do is I look at these zones here, and I look at these zones here, and I buy below, sell above, sell above. And that's for gold specifically. But right here, everything, let me show you guys this. That's the easiest way I can describe it. You always have neutrality. So the easiest way to think about it is anything below neutrality is a buy, anything above neutrality is a sell. But then we also talk about discounts and premiums in the courses. And so there's going to be the highest probability areas to trade. So if this is neutrality and we've just broken above, we're getting closer to sell zones, to sell territory. But we're still too close to the middle. So what we'll do is we'll wait for the market to get back up to the top of the range, line it up with the fibs, and take a scalp short position from there. All right. I don't like to go into too much detail on these things. I don't want to confuse nobody, but ChartAddicts members, you guys know the drill. Fair to say now is waiting game to see where we max out, and then the shift is going to happen. So I think that Jerome Powell celebrated too early with the whole soft landing narrative. And I think that the only thing keeping inflation down right now is the price of gas. Because you look at core CPI versus regular CPI, it kind of seems like the price of gas is really, really artificially keeping inflation down. And Mo, we already talked about this, where we depleted the strategic petroleum reserves, which is typically how the government can dump oil into the markets and bring prices down. And because we've already exhausted that, if we go into an oil shock, we got nothing left. We got no more ammo. Inflation will go back up. And so I think that's what the market is betting on, is that inflation is going to go back up. Why is the stock market going bullish? Somebody give me their best guess. Now we keep spending with no signs of slowing down. This leaves us with deeper problem once we can't match those numbers from suppliers and max out our credit limits. I think that as long as demand is there, we'll find a way to produce it, but price will go up. You know, that's the whole thing. The reason the stock market is going up is stocks respond to sales. All right. If we're looking at Apple, if people are buying more iPhones and MacBooks, Apple is making more money. And if Apple is making more money, the investors feel better about that stock and continue to buy. And so you do that across all the other stocks, and then you weight them into an index like NASDAQ, you're going to get a bullish response if there's more sales. Consumer sentiment is like the early indicator. And then consumer spending or retail sales is that actual number. And then the lagging indicator is going to be corporate earnings. That's where it shows up. So we all spend money at Target or Macy's, whatever. Macy's then has their report on corporate earnings and how much they've made. And if investors feel like that's doing better, they get enthusiastic and they buy it up. So because of inflation, everyone's going to be paying more. Because of producer inflation, people are going to pay more because demand is still high. And that's just going to make these companies so much more rich. It is so much richer just charging 10% more for your product. You're going to make a lot of money. If you're Apple making 25 billion a quarter and you make 10% more. Like, you're playing in a real game now. Another 2.5 billion on top just for nothing. All right, so that's why I feel like there's some enthusiasm, especially in the tech sector. Inflation is going to lead to people buying more stuff. How do people buy more stuff if it's expensive? Financing. Exactly. We're going to max out credit limits. Mo. Financing is going to be how people continue to indulge, but that only works when people have jobs. When you don't have a job, you're not going to get extended any credit. And so that's where everything slows down. Jerome Powell said very early on, I don't know if anyone remembers this, in order for us to avoid a recession, in order for us to avoid an inflation crisis, we have to ruin the labor market. We have to make sure that people lose jobs, especially the high-paying jobs, so that they spend less and we can get prices to come back down. Because as long as the people in this country that have a high-paying job or a decent-paying job continue to spend at the stores on conspicuous consumption, they're going to keep prices high. Rough morning. I got hit SL by 1 point, and then my entry was off by 1 point and ran up. Well, write it down. There's always a lesson, brother. Always a lesson, always a lesson, always a lesson, Josh. The lesson is you put your stop loss too tight or your entry was too early. One of those two. If it's a pattern that happens regularly, figure out which one of those it is. If it's always hitting your stop loss and going in your direction, there's something you can do to fix that. So for me, I realized, like, I put my stops in break even. Yesterday, I caught these longs before I went to sleep. I was in profits, woke up in the morning, and I was like, okay, I'm going to move my stop loss to break even. News came out, hit my break even. As it was coming back up, I entered a trade right there, right at my original entry, around 290 on TradingView. And then I was in deep profits. I was sending out screenshots, trade is going well, and then massive retracement at the open. Probably like an hour or half an hour after the open, grabbed my break even and continued up. I know the pattern in my trading. I know that most days the market's going to hit my stop profit or my break even and go my direction. What I do is I take partial profits because I know the market could reverse. No matter what, I'm going to walk away with something. Like today, I had 30 lots open and I've closed 20 of them so far. I've already made money. Whatever happens here, I consider extra credit. And that's why I feel less and less attached to the trade the further it runs. Most traders do the opposite. The further a trade is running in your direction, you start to convince yourself it's going to keep going forever. I was there for years. It's a natural greed component. It's like our brain works in continuity. When you're walking on a street and you're about to walk around a corner, you don't know what's around the corner, but your brain starts to build an expectation about what's around the corner. And you can assume that there's going to be the sidewalk's going to continue. There's going to be stores. There's going to be a thing. Like, your brain is piecing these things ahead of time. In trading, it's dangerous. What you'll do is, like, the market will start moving in your direction. And you'll be like, oh, but it could keep going. And I think it's going to break this level and that level. And that's a fallacy. So instead, I back tested. I saw the patterns. I figured out where, if I closed here, like if I closed at that spot every single time, I'd be making money. You got to find that thing. And that's what the personal coaching program is really for. Like, I'm here to help you guys find out exactly what is the defining factor in your success or your failure in trading, how to build a strategy around it based on your personality, and teach you how to optimize that strategy so you can adjust it over time. You guys want to know what's crazy is this is some serious heat and there's only like 40 people on YouTube. But if I was a 15 pip trader, I'm pretty sure I'd have a bigger audience. I don't know. Maybe I should go back to being a 15 pip trader. No, I like this. lot of people ask me how I keep myself from having FOMO, and the only thing that it comes down to is confidence. Like I'm so confident in myself, in my strategy, in the way I understand markets, that I know I'm going to capture the next trade, right? I know how market structure works. I know how breaks of structure and retest of structures work. So if the market is leaving and you feel like, oh, I'm missing this, and I just want to jump in so I can take advantage of this, that it comes from a lack of self-confidence and a lack of self-belief that you can do it again. Okay, you found a great trade, you lined it up, you had to go to work and you missed it. Now you're like, oh man, like you're beating yourself up for missing the trade, even though you were doing your job, which is going to fucking work. So instead, get very confident in your ability to do it again. That's all it is. I don't mind missing this trade because there's a million more coming, and I will take advantage of them, and I can take advantage of them. How is it possible to only have 30 people on? I think it's because we got on a bit late, or I got on a bit late. All right, this was the original markup, I believe, from September 7th, so about a week ago, last Thursday. Price had just rejected 182. It was on the daily. That was a hell of a trade. That was at 182. That was down here. That's where price was. Price ended up pushing all the way up to 523. So from 180 down to, or up to 150 or 15,500. Let's call it, I'm going to round up and say 200 over here. So it's about 300 points, 320, 340 points just in that move. Then we had a nice retest, same exact zone. Price closed above. The daily candle closed above that previous area. Okay, so first we had a closure below. It's kind of sketchy, but that wick was convincing. Then we have a bullish candle here, and then the bullish engulfing that ate up the last three candles. Retracement that closed above that support level. We had a wick through the zone. This was yesterday's CPI news, but the body of the candle closed above, and then we're still forming bullish momentum. Now we're going to be breaking this level here, and we're just going to do it all over again. Okay, we're going to have a closure above the zone, and then have a push back in, and then continue. So this is why we don't chase. We're going to be looking for that move back into the 400s. And yeah, that's the idea behind the bigger picture of that trade. Then if I had held all the original position, that'd be a bag. Almost 5K. But that's the thing, is like I take partial profits, not because I don't know if it's going to continue or if it's going to reverse. I take partial profits based on probabilities. Okay, what's the probability it reverses? What's the probability it continues? And then what's my strategy say? My strategy says, at these specific zones, take your partials because it could reverse. So a lot of folks, they make decisions based on the money. And if you really want to become the best trader you can be, you want to make decisions based on technical strategy, based on a predetermined set of rules. That's how you get consistent results. All right, y'all, it doesn't really seem like we're going to get a re-entry here. Only thing I'm really seeing is a potential 88.6 rejection like this, which we are at right now. Okay, so here's the previous high. The market just broke above. So this is going to be an area where like we just want to see a closure above the highs and then we can get the pullback. That would be ideal. So yeah, most likely not going to get a great trade opportunity in the session. If you guys got to hop off for work or whatever it might be, just set your alert. Set an alert. $15,415. It'd be easy enough. 15,415 is going to be that re-entry. So what I would do is I would set an alert, add an alert right there. Notifications. I don't want the email. Play the sound. Notify me in the app, and then show me a pop-up. There we go. So now I'm going to go about my day. Market comes back to retest that area. I'm going to be right there waiting for it. All right. I'll also set another alert on the break of this zone right here. If we break those highs, I want to know. If we come back to retest, I want to know. All right, so if you have to hop off, I would mark off these levels on your chart, have them on there. Market comes back to retest those lines. That's all it takes. Like I'll just go over here. Imagine this was your mobile version. Right? Anybody have questions? Questions, comments, concerns? We good? All right. Ladies and gents, if you guys want to know how to read market action, how to trade and day trade NASDAQ 100, October 1st to the 3rd, we're hosting an exclusive 3-day boot camp to master NAS 100. If that's you, if you guys are looking to take your trading to the next level and learn how to day trade NAS, this is going to be the boot camp for you. Head over to ChartAddictsFX.com. It's also in the description below. If you guys are watching this on YouTube, please drop a like on your way out. I just finished up a podcast yesterday with Anthony Pompliano, huge name in the crypto industry, and we broke down the state of regulation, the state of crypto right now in the United States and globally. Why is price flat? What do we need to see in order for crypto to start moving? If you guys are invested in crypto, which I'm pretty sure everybody is, and you're holding a bunch of coins that are like literally sitting in the dirt and whatnot, and you're starting to lose interest, this is where all the wealth is made. When no one gives a fuck about crypto and everyone's dumping these coins, and whenever it pumps a little bit, they're just cashing out and taking profits. This is the time where you can accumulate as much as possible. When the show starts rolling again and the coins start moving, that's not the time you want to start chasing these opportunities. All right, so be proactive, not reactive. Had an incredible conversation with Pomp. I'm going to post it up in the next 2 days. And yeah, looking forward to getting you guys' reaction to that one. Look at the accuracy, people. Yes, exits, entries, take profit zones, partial zones, everything. And now we wait. Yo, Kiana is on here? Stop playing. I'm currently in phase 2 of my funded challenge. Kiana, stay consistent. I believe in you. And if anyone's going to pass that phase 2, it's going to be you. Just stay as consistent as possible. The only thing that really gets people in phase 2s nowadays, especially without the time limit, is just rushing it or expectations. If you have expectations that you're going to pass it in a certain amount of days, or that you're going to, oh, I just want to get to the first payout so I can, but if you're getting too ahead of yourself, it's the only thing that can get in the way. If you just keep doing what got you to the dance, you're going to be perfectly fine. But best of luck. If you guys want to show some love in the chats on YouTube, show some love, say Kiana, good luck. Gotta get off. Bryce, always good to see you on here. Thanks, Roy. Gotta hop off too. My boss is watching me on his new 4K camera. Max, smile and wave, boys. Smile and wave. Do you ever consult and correlate the DXY when entering a trade? Only for currency trades, Castro. So what I do is I look at the DX. I only trade 2 currency pairs, which is EU and UJ. What do they have in common? Dollar denominated. So I look at the DXY first at the beginning of the week, get a sense of direction. But because I swing trade currencies, I don't check the DXY for every trade. I just want to get direction. If I think the DXY is going to continue for a month, I know that EU is going to crash for a month. If I think that the DXY is going to go up for a month, I can buy UJ and sell EU. Okay. There seems to be some kind of lag on the stream. Okay, it is what it is. Ladies and gents, I'm not going to sit here and watch water go. We all have a lot of potential and human potential. Do not waste your time on charts if there's no opportunity right now. Okay, if it's not going to come back and retest the zone, I don't care. If it's not going to break through this level, I don't care. I'm not going to sit here and take random trades. So, to show you an example of what a professional trader would do, I'm going to go fulfill my highest purpose in life, whether it's creating relationships, whether it's doing my job, preparing for this boot camp on October 1st that I want to see all of you guys at, preparing for the FX Summit next year. I'm going to go do something productive, and I'm going to leave my alerts on. If you're watching this on YouTube, please drop a like and subscribe on your way out. Great to see all of you guys on the stream. Take it easy. Peace.